And our thesis really was the fact that blockchain in the emerging markets is not a luxury, it's a necessity. I think venture capital money is extremely important when you want to create a multi-billion dollar outcome, you want to be more global in your positioning, you want to go aggressive once you found some sort of PMF in your head. A lot of respect for what they've been able to do, but this is not how we're going to be, being to be at the forefront of global innovation. And how can you ignore such a big technology? Like if you're so focused on AI, you want to go into deep tech, you want to go into climate, why is blockchain being singled out? And I just don't understand the rationale for this. Mindshare for me was something that was, oh, you just keep paying people to get something XYZ, but I do not think of mindshare like that anymore. And I'm now focusing on also cross-border payments.
This December, join us at India Blockchain Week for a preview of what's to come. On this XTC podcast, I sat down with Sharanya Sahai, Vice President of Investments at Emergent. Together, we discussed how to unlock venture capital in emerging markets, why blockchain adoption in India is at a tipping point, the exciting partnership between XDC Network and Emergent. Don't miss this insightful conversation. Tune in to Capital, Code, and Conviction. So welcome back to the XTC Blockchain's Impact in Emerging Markets. While blockchain is often associated with the developed world, its real transformative potential lies in places like India, Africa, and South Asia. These regions are where blockchain can solve for real-world problems, from financial inclusion to governance. I am joined today by Sharanya Sahai, Vice President of Investments at Emergent, a venture firm dedicated to blockchain adoption in emerging markets. Emergence focus is not just on the technology, but on helping these regions leapfrog traditional systems and embrace decentralized solutions. Sharanya, let's start with an introduction to Emergent and about you. What makes your approach different from other venture firms, and what drew you to blockchain in emerging markets, especially since you're from Wharton? So can you give me a story? Can you tell me about all of this, Sharanya?
So hi Kishan, thank you for having me at the podcast. I basically represent a firm called Emergent. We are a dedicated fund focused on the emerging markets, backing founders at the pre-seed and seed stage particularly. And the reason or what sets us apart is the fact that we are, I think, the only Web3 investor of scale based out of India, as well as one that's covering the African continent too. We started investing in these geographies back in 2022. And over the past 3 years, we've been, backing about 35 founders across these regions.
Wow.
And, our check sizes are typically in the range of 200,000 to 2 million, with an average check size of 500K. And that might be small compared to so many of the Western VCs, but it is a substantial amount of capital for founders building in blockchain in these regions. And our thesis really was the fact that blockchain in the emerging markets is not a luxury, it's a necessity. And there can be a huge unlock in terms of value creation in the emerging markets through the use of blockchain technologies. And when we look at these markets, we also have a Web 2.5 thesis, which means that we're not necessarily going after the degen native Web3 protocol next. It's more on how the Web3 and the Web2 world can come together more. How bigger Web2 companies can expand their offerings using blockchain rails. Most recently, you would have seen so many cross-border companies stemming from Web3 startups or Web2 startups now offering blockchain-based solutions. So that's really the Web 2.5 thesis that comes for us. And the other pillar that we have in terms of our mandate is to back founders from these emerging markets. And the thinking behind this is that, talent is more equitably distributed in the world than opportunities. And we find extremely good quality talent in both these regions, Africa and South Asia, but they don't have the necessary opportunities and access to capital. So that's the reason why we decided to, start this endeavor and hope to keep backing more and more such founders in the near future. About myself, I come from traditional finance. I was an investment banker, spent a couple of years in private equity before getting into the Wharton Business School. Having spent time in the US, I loved the energy, the no cap on what you can do on your professional side, but I'm extremely inclined towards, my own country, and how I could, spend a career in something that actually makes an industry.
It's
Sort of
amazing,
intersects with.
Sharanya. It's amazing.
Once you get a decent schooling, you just want to optimize for a couple of things. One for me was excitement in terms of professional growth, and the second was obviously solve a gap or something that's actually a problem versus just being another private equity guy making millions. So that's what brought me here, and I hope we can make this franchise also as big. It's just a start, but that's nice to go.
Thank you for that introduction, Sharanya. So, Hashed Emergent is focused on scaling blockchain in emerging markets like India and Africa. Can you tell me more about your mission and how you approach building in these regions?
So we draw a lot of inspiration from our anchor investor and also a big partner
What is
called
an
Cash.
anchor investor?
Okay, so just in layman's term, an anchor investor in a fund is somebody who contributes the anchor capital, the majority of the capital. It doesn't have to be majority all the time, but it still has to be substantial and material. So
Okay.
if we, for example, are a certain size fund, then a significant percentage of that needs to come out of an anchor investor for them to be called anchor. Right.
Got it.
So we work very closely with the Hashed team in Korea. They've been around for a good decade now and have backed marquee startups in the industry, including the likes of Athena, ZK Singh, Captos, Decentraland, Sandbox, etc. And
Yeah.
they really built out the ecosystem in Korea. So
Yeah.
they used to not just invest, they used to focus on industry events, spreading the word out there, and therefore we also do a lot of the same, right? We author the India Web3 Landscape Report every year. We author the Nigeria Web3 Landscape Report every year, and try to put the spotlight on the industry and its founders through some of these research-based initiatives. Other than that, we host a lot of events, right? Initially, we would be sponsors of ETH India, but over the last 3 years, we've been the sole hosts of the India Blockchain Week, which is, I think, the largest blockchain.
This is a great event. Great event. Thanks for doing that.
No, thank you. And I think we will come to the kind of support, industry players provide us for the same, maybe in the second half of this podcast. But my point really being that it's not just providing capital, it's about doing a lot of these, research-based initiatives, putting the word out there. Recently, we also hosted a large demo day in partnership with Aptos. We did the base India, Africa, and APAC hackathon finals. So we keep trying to, nudge individual activities, initiatives to push the envelope on what the India Web3 blockchain scene could look like. And that's really what I think sets us apart, because for a small fund of 30 million, we are a large team, and we do need to have that kind of broad-based approach to actually create or build an ecosystem out versus being part of a developed one had we been in the US, Singapore, or Europe.
So I did go through your report, by the way. I downloaded the report, and it's something that every crypto person, every Web3 person, every Web2 person, in fact, they should all read it and just look at how the potential of this technology called blockchain, about how people are leveraging it, about how people are actually solving for so many, small world problems. It's insane. The report is insane. You guys have to look at it. I'm going to link it down in this podcast. So please make sure you guys read that research paper. So moving on. Now we head on to the next section, which is unlocking the VC game. Many founders are unsure about how to approach venture capitalists. From your experience, what should founders in emerging markets know when looking to raise capital from firms like Hashed Emergent?
I think what they need to know really is where they want to take the business in blockchain, because you have a lot of interesting ways of raising capital in the form of token sales. The need for having a VC should be carefully evaluated, because I think a lot of the times there can be very successful projects that raise just a friends and family angel round or do a token sale and raise enough capital to build a reasonable business of scale. Having said that, I think venture capital money is extremely important when you want to create a multi-billion-dollar outcome, you want to be more global in your positioning, you want to go aggressive once you found some sort of PMF in your head. So I think what is important is for founders to know where they want to go and where they are. So if you go to a pre-seed or a seed VC, with a lack of clarity in terms of vision, that's going to be looked at as extremely difficult. And if you go for a problem statement where you don't have prior experience in terms of solving for something that is within that industry, then for us as venture capitalists, we basically playing an underwriting game, right? We have to look for data points to understand why would you be successful in cracking a problem. Now that could either be because you have a product that has shown some numbers which gives us some sort of comfort, or it's a function of the professional spikes you've had in the past, whether it's building, being part of a larger organization in the subsector, doing something great, or having had a very successful career building something in an allied space. These three things are not there, then I would think that it's very difficult for Web3 founders from the emerging markets to raise capital, particularly because the support system that happens or that is there in the US. For example, if you are from an MIT, Harvard, Stanford, particularly the tech VC community of these colleges is extremely strong. So a lot of times you're able to raise the pre-seed seed round just because of your network. That may
Exactly.
not be the case necessarily for founders from
Yeah.
India.
By the way, that's XTC's motto. Your network is your net worth. So
Yeah, so that's the thing, that you need to understand what the limitations are, and then it is incrementally harder, I would say, for emerging market founders to raise, because they are not top of mind for any of these bigger VCs, because these markets that they are operating in are not understood as well by some of the larger VCs. And if you look at India, none of the domestic investors are investing in blockchain because of certain regulatory hurdles or just the clear lack of understanding of what the technology is
Man,
about.
tell me about this. It's just
Yeah.
so difficult being an ecosystem manager in India and trying to get these family offices to come and put some money into some emerging technology. There are so many,
Yeah.
yeah, it's just the government makes it so difficult for people to just do something great.
Yeah,
It's,
I don't know. I think people are very happy to back extremely, I wouldn't say boring, but more of the same kind of businesses, right? Like yesterday, I saw a very solid tier one investor I look up to, great, back a sweet shop. So for me, what will another 200 stores of the organized sweet industry do for the world? I don't know. It makes great money, I think, which is their primary
diabetes.
responsibility. That too, right? But like for me, I'm like, what does this really do in terms of 20 years later? What would you think about? You create another place for people to like eat food, and that's maybe a better thing to solve for if you were in the 80s, right?
Yeah,
Is that the problem statement you want to solve for when you are in the 2025 year? Maybe not. Like not for me for sure.
not
So
for
I
me
do
either.
find the Indian domestic investors a lot more reticent, a lot more cautious, overly pessimistic. And let me say this, like a lot of respect for what they've been able to do, but this is not how we're going to be, be at the forefront of global innovation. And how can you ignore such a big technology? Like if you're so focused on AI, you want to go into deep tech, you want to go into climate, why is
Yeah.
blockchain being singled out? And I just don't understand the rationale for this. And there is such a lack of information about the industry, and it's easier to just say, oh yeah, it's all a scam,
Yeah.
rather than trying to get into it and understanding what works and what doesn't.
Yeah. And of course, you just have your blanket bans on everything, like your gaming, cryptocurrency. Let's just tax them 500,000% for whatever it is. It's fine. No problem, Nirmala Sitaraman. No issues.
Yeah. Yeah, I mean, in the sense that government can come up with a policy that at least gives more and more clarity. Like you don't even have somebody to talk to. Like that's the more annoying part. You want to have a certain tax
Yeah.
regime, that is your prerogative. But to not have a place where we can engage with people, where you're trying to convince an 80-year-old person about what blockchain can do, when none of the secretaries understand what the technology does, is futile. And that's why we don't see more and more hashed emergence of sorts, right? Like because there's a reason why people are not doing this only. It's not that we're
Yeah.
just contrarian or thinking. It's because a lot of people don't think it's worth the risk.
Exactly. Exactly. Yeah. That's the point. You guys see the value in developing one's own country and helping out people who have talent. Whereas most VCs, their vision and mission might be the same, but their end game is to just make money. So, yeah.
Yeah, I mean, to be truthful, like, I mean, I don't blame privately focused enterprise, profit focused enterprise choosing what they want to do. But I do think at least from the people who've done extremely well, right? They can take some of these risks and they are not. Like they choose to back some of the most, what do I say, non-moving kind of initiatives. And I just think that given their power, given their capital, they should use it to better use.
Yeah, just like getting a 3.6 crore package in some four said company and then just chilling out, buying some places here and there, work for the next 20 years and then just realize what have you done with your life? Nothing.
Yeah, so that's something that motivated me too. And yeah, let's see. It's a start.
That's great. I think we think alike, Sharanya. So let's discuss the need for sustainable growth over short-term games.
Yeah. Another thing that I think is extremely important is to understand your motivations for why you are building what you're building. We have specifically stayed away from pre-TG token deals. We do not think that everybody can create value in the span of 12 to 15 months, and the pace at which billion-dollar companies are being built in blockchain without the necessary fundamentals backing those valuations is concerning. So please do not look at this industry as a quicker way to get rich. Yes, it's more accessible. Yes, it's more democratized, but you will still have rational players operating if it's too mature. And in that sense, not every token that launches is going to, hit a billion. And to be fair, in the last 3 years in India, very few, I don't even know who has been able to sustain $1 billion plus valuations. Yes, I see the prompt apart from XDC, but it is basically a glut in the market for the past 2-3 years where you haven't seen large outcomes from India, and that's purely because people just think that launching a token is extremely easy and you can, for the lack of a better word, manipulate your way out of it. In the sense, pay the exchanges, pay the market makers. That's going to last for maybe a couple of months. And then you're going to see that very similar looking chart that you see for most tokens in crypto.
The chart goes like this, and then it goes like this, then...
Yes.
And then it flatlines.
It's a slow death. It's brutal, but it's so common, right? Like I think 90%, if not 95 to 99% of the charts look like that.
Yeah.
So join the industry for the right reasons. If you were to justify valuations for your company, you'll always have to prove that the fundamentals back it in some shape or form. I do agree that the metrics have changed. Everything is not just about revenue and profits. Like that is something that I understand is different. We live in
what has changed, Sharanya?
So earlier, I would think of attention not being a core, value generator, in the sense that, I would not value attention or the spotlight on a product as much. But in the age of now AI, which is going to be even more, exciting, the ability to generate and garner attention is going to be even more difficult. So every pre-seed seed founder needs a chief marketing officer as a founder. In fact, the founders would have to be that initially itself, particularly in crypto, to start getting the spotlight on their own ecosystems. And I think that's a very important, skill. In addition to, of course, when you have to build a product that actually works and gets people excited about what you're doing and solves people's problems. But I would totally discount this earlier. Mindshare for me was something that was, you just keep paying people to get something XYZ. But I do not think of mindshare like that anymore. It's a very good way
That's great, actually. I had a conversation with another team called Rabble, and who's doing the same thing. They're trying to basically move mindshare into equity. So I had a really good conversation with the founder, and it's up. I'll link.
Monetizing intangible assets, right? Last week I was using the Urban Company massage services because I had some sort of a back pain. And then you realize that Urban Company is such a successful company and going to be IPOing at multiple billions. but the people who've been with them for 6-7 years, the service people who actually built that overall offering to be super robust, they don't get any equity. They basically have the similar incomes, in fact lower, right? Because initially you do give them some sort of incentives to come onto the platform. So I think the way to democratize value sharing versus who creates and who gains is definitely better in blockchain. But it should not be thought of as completely different, where you have a bunch of airdrop farmers like shit posting on crypto just to get an extractive airdrop and like not contribute anything meaningful of scale and of value over a long period of time to the protocol. So, yeah.
So, Hashed Emergent's portfolio includes 32 companies, each with a unique focus. Can you share a few companies that stand out and perhaps some lessons learned from challenges you faced in scaling blockchain in emerging markets?
Yeah, thanks for that, Kishan. I mean, I'll talk about the hits and misses both across the portfolio. Coming to the hits first, we broadly have two pillars of our investment thesis, right? One is the emerging markets, where the market is basically these developing regions of the world. And the second is founders from these markets, right? We believe that founders from India, as you would have seen in the SaaS space, do extremely well building global products. So one of the companies that we backed really early on, and this was at the peak of the bear market, is a company called Thea, and they basically were building a Bitcoin self-custody wallet. And at the time, Bitcoin was trading at $20,000. FTX had happened, Terra had happened, and the industry saw no future in terms of when the ETF would be approved. But the founding team was extremely solid. I had in fact worked with the CTO in my previous stint when I was in a private equity firm. We led the Series B round of a company called Porter, that is now I think one of India's largest intra-city logistics provider. And the CTO there went to Stanford after 3 to 4 years of our investment, 2 to 3 years of our investment, and I met him in SF. And he mentioned to me he's building in the Bitcoin space with his friends, and one was of course an IIT Bombay alumnus who was part of this fund called Chirate, and then went on to be the founding team member of a company called Prodigal that raised from Axel. And the other was the head of blockchain engineering at Robinhood. Porter, yes. I know you're an avid user. That's a good thing. So that time I was like, this is a no-brainer in terms of the quality of team, and we backed them. And after we backed them, they got into YC. So it was a super early play for us. They went through a tumultuous journey, right? Like self-custody in Bitcoin, even if you have, like, they now manage about $100 million of Bitcoin in their own wallets. But self-custody on the wallet side is a very thin margin business. So, they've had to think around, what can we do more? And now they sort of really found, I think, good PMF, I would say. They are giving homeowners in California, starting with California, access to Bitcoin using their home equity. So if I'm majority of Americans' wealth is blocked in homes, right, in the US. And if I can pledge a certain percentage of my home while still occupying it and take Bitcoin against it, and in the 5 to 7 years, depending on the appreciation between the home asset prices and Bitcoin, settle it in the form of a loan agreement, that's crazy unlock, right? So that's what they're doing. Crazy. It's called Horizon now. The second one is, of course, a much more known crypto native project called Leap Wallet. This is the team that worked at Swiggy. Extremely strong founders, built one of a very strong wallet UI UX experiences, and are now focusing on also cross-border payments in addition to pure degen, swaps and transactions. So we backed them last year in November. We co-led their Series A with Pantera. Again, a very, very strong team.
Yeah.
Our portfolio has a median age of about 18 months. So I will not say that they are winners outright. And I mentioned to you that we don't focus on token plays PTG. So it takes a longer time for our portfolio to be visible. But these two companies, in terms of the founder bets, have been solid. Coming to the, emerging markets piece, and that's really shown a lot in Africa particularly. We have micro or medium-sized loans company that uses the blockchain called Gia that recently raised around from Coinbase, TCG, and Stellar as part of their Series A round. We backed the founder in 2022. Did not see a lot of PMF for the first 2-3 years because stablecoin adoption had not picked up. Lenders were not willing to lend to a blockchain-based company, and it had its own journey of reaching where it has today. But right now, it's like giving out loans in Africa and Southeast Asia, particularly in the Philippines, has disbursed about $12 million worth of loans and is now in a much better position because obviously macro tailwinds are there and they're trying to disrupt how blockchain can enable lending use cases. So that's a very, very strong company in Africa that we sort of backed. On the other hand, we have a lot of, I would say, initial successes through our fund investments in Africa. To understand a geography, first you have to build relationships there, right? So we invested in 2 funds in Africa. Okay. And through one of the funds, we have a portfolio company called Lemfi. That's basically one of the largest remittance plays in Africa. And recently, they also announced one of the portfolios called Honeycoin, which is a large on-ramp, off-ramp provider in Africa, raise money from Flourish Ventures. So to be honest, the first distributions for the fund has come from Africa, which was something that the LPs were always pretty skeptical about. That does Africa even return money? The answer to that is yes.
Yeah, I get what you're saying. Yeah.
So we have our couple of portfolio payment companies in Africa. I wouldn't say that they have found PMF, but extremely encouraging in terms of traction vis-a-vis last year. So that's some of the hits. In terms of misses, the gaming industry hasn't really panned out for us as we would have liked, and there could be a couple of reasons for it. One, of course, that games need to be fundamental, extremely fun, or they have to be having serious quality of risk reward, because that's another way for people to make money, right? So the first thing hasn't happened on chain. I don't think you can make extremely compelling games on chain, particularly on the core, mid-core side. There are technologies that will help this get better and better. But the usage of blockchain for running heavy duty games is still questionable, and we were not able to find product market fit the portfolio that we had backed. So I think for us, Web3 gaming has been lackluster. The other side that we did see, one of the portfolio companies that did not particularly do well was in terms of the RMG space, and that really I think can be blamed on regulation too. And they were heavily profitable, and then overnight you had a GST 28% on overall deposits, which is unprecedented in the world. The only other country that does it is France, and that to the rate is 2%. So
just 2%?
Yeah. So it's just like you can't tax somebody at 28% of overall GST, like of overall deposit. That just doesn't. That you rather just ban it, because then that's slow death. Where people are still trying to figure out PMF, because there cannot be any when you're subsidizing such a big part of somebody else's tax obligation. And I think since that we did not take any GST, any regulatory bets on the gambling side, I would say. And I was always clear that there cannot be a very big distinction between skill-based game and what is not skill-based. So I understand the government's position on that, but then they could have just been clearer from day one. So did not back another RMG company after that. So that maybe did get saved. But we do have some interesting playtesting companies that focusing on the gaming side that we will be announcing strong traction in very soon, and have some major announcements out there. They've partnered with some of the biggest names on the street.
Any alpha for our crowd?
You will find out in a couple of months. No alpha here as of now. It's still under the wraps, but should be announced fairly soon. So one of them was that. Then the other one, I told you, right? Like you cannot build a metaverse with pre-seed kind of funding in emerging markets. That was totally a no-go. I don't know. Maybe sometimes you're in a space where everything is looking so good that you tend to overestimate the power of something. You overestimate in the short term and underestimate in the long term. So we did back a metaverse startup that just didn't take off because it wasn't compelling enough. And I think not just them, so many of the other metaverse projects were not compelling enough. So we stayed out of it after we did not find it, reach any sort of PMF, even close to PMF in the first try. So those were some of the misses, more on the entertainment, because I also think entertainment consumer side, because I think now when the base technology is built well, a lot of the consumer innovations will again be on the rise.
Got it.
So, yeah.
Thank you so much for expanding on that section for us. So moving on to the next section. So Sharanya, you being such a successful personality in this whole Web3 industry, can guide people and with some certain simple messages. You as a founder and you being in the VC world, right? So, what is your message, or what are your messages to founders seeking funding?
Yeah, so I don't have any successful business that I've built, so caveat that, but I do have seen a lot. I think the maximum number of pitches from India is something that the Hatched Emergent team sees. A common mistake I would find is please prepare well. Founders spend so much time iterating their product, they've built, looking at the tech, optimizing all of that, and they come to the presentation with a VC with such a half-hearted, diffident presentation
Mm-hmm.
while writing, maybe like a thesis on one slide, which nobody's going to read. So I think it's very important to do your research on how to capture a VC's attention. And my simple mantra would be less is more. Highlight your core message, make it clear enough on a slide. There's no need to write too many text details, and just practice your pitch. I think if you are not confident of pitching your own business, then I don't get the necessary confidence. And this is even true for some of the founders that we've backed, right? Because I do think it's a learnable skill, but there is a discount that you apply to founders who cannot storytell, if at all you're going in, because you're like, okay, this needs to really be brought up to speed. And I've seen this feedback from Web3 VCs based in New York and SF2, that Indian founders, great tech, almost no sales, right?
Yeah.
So please try and improve on that. It is also a function of how we've been brought up in schooling. It's more that do the background work, and people shy away from being in the spotlight, and that's completely the wrong way to look at this. So first of all, please be well prepared. Second, less is more. Third, understand your VCs. Look at who you're presenting to. Keep it to the point. Make things that might be relevant to them. Try and get an introduction through a warm connect. While crypto Twitter DMs are very, very active, I think because there's so much of noise / scam in the industry, it's very important to go through somebody that, the other person might trust, at least to be taken seriously. So I think that is something that you can do, unless of course you have great traction that when the data talks for itself, in which case you don't need anything. So those will be some tips that I would like to give Indian founders. And for those who've raised some sort of funding at the pre-seed stage, please head over to Singapore, New York, Dubai, or SF to make sales. It's very difficult to do things digitally. Yes, COVID was great. Yes, people work from home. There's no denying that. But you can over-index on the US and it will not fail you. Like, spend that $15,000 over 2 months there. Spend the time there. Get your next connections there, because it's incrementally harder and in fact much more expensive to do it out of India.
Yeah, true. And it's also science, right? 70% is just body language.
Yeah.
So you need to scope the person out. They can scope you out. And then deals happen very quickly. So, yeah. Very good advice from Sharanya to potential founders. And yeah, I think generally in life, I guess. Thank you for that, Sharanya. So, the end game. Looking ahead, where do you see the future of blockchain venture capital, especially in emerging markets? How does Hashed Emergent and XTC fit into the larger vision? Sharanya, over to you.
Okay, so the part of blockchain as an industry, I think, is going to be omnipresent. We're going to be having a lot of businesses that will be using the blockchain at the back end to do regular tasks, whether it is loyalty programs, whether it is payments in a broader way, whether it is, looking at provenance on supply chain side. So blockchain, because it's going to be so cheap to use while still being extremely scalable, will be part of everybody's daily lives. And we will have Bitcoin as a very mature asset class that is held by sovereigns. It'll be part of treasuries of the world. Hopefully a big part of Indian individuals' treasuries, because I saw some facts that almost like 5% of the overall Bitcoin supply is actually held in some shape or form by Indian retailers. And I don't know how verifiable that claim is, but I was incredible to see.
I think it's mostly the exchanges that hold the Bitcoin, not people.
Yeah,
because
but I'll send you the data point on the individual holdings. But it is a natural, progression to me that Indian individuals start holding it, because we've held gold for so long, and that's the same value prop. Apart from that, I do think the industry will have broad-based acceptance because of increasing regulatory clarity starting from the West. So it will not be looked at as a scam industry. There'll be more regular banking partners for blockchain companies in the future. And apart from that, it will also be extremely common for non-Web3 startups to raise rounds of funding using the blockchain, like seed rounds, right? Like that will be extremely common. Anybody could be an angel investor because you're using blockchains. I think that will be the future for sure. In terms of where we see as a VC being a asset class within this broader story, I think blockchain managers will have to also develop some sort of liquid muscle, in the sense that you will need to have a strategy that also looks at liquid tokens and not just, pre-seed ventures, because at the end of the day, competing for capital that is looking for liquidity at some point in time. So just being pure play pre-seed venture private specialist doesn't work. You'd have to broaden that strategy out. And I think that's something that's very interesting. And I think a net positive for the industry, because that will involve a lot more people coming into the industry, both from a manager perspective as well as from an LP perspective. Because unlike other sectors, liquidity in blockchain comes at least 3 to 4 years earlier than other funds. In terms of where we see like an XDC stay in this world, I think it's going to be one of the core, bloodlines of how enterprises interact with each other, how institutions adopt this technology. It doesn't have to be the only thing that people use, but just how somebody would want to have 3 to 4 different infrastructure providers from a pure security perspective. I think there will be 3 to 4 different chains that are going to be used either for specific use cases or just from a risk diversification perspective. So I think both XDC and Hashed Emergent should be having a sustainable future going forward, which is increasingly getting de-risked as we keep moving ahead with regulatory clarity and broader adoption.
Perfect. Man, you're so intelligent.
Thank you. My girlfriend thinks otherwise, but good to hear from folks who are in the industry. She either thinks I don't know what I do.
And of course, I would like to also say that XTC have come on board as silver sponsors for the India Blockchain Week. Sharanya, thank you so much for enabling us, helping us, showcase our products and what we are doing to the Indian audience. Thank you so much, Sharanya.
Yeah, no, it's always great to have partners such as you guys pushing us and helping us build this ecosystem, because it's not possible to do it individually. So extremely grateful for the support. And hopefully more and more common initiatives, collaborations for the two entities ahead. And this is the start of a long-term relationship. Thank you so much for having me.
Superb. Sharanya, thank you for the insightful discussion. It's clear that Hashed Emergent's focus on emerging markets is vital to shaping the future of blockchain adoption. For our listeners, remember that India Blockchain Week 2025 will be held on the 2nd and 3rd of December 2025 in Bangalore, and we are excited to see you there. This has been a Capital Code and Conviction. Until next time, continue to push the boundaries of blockchain's potential. Thank you. I'm Kishan Balaji, your host, and I'll see you guys in the next episode.